Intel has put itself in a messy situation. For years, the company failed to invest adequately in research and development to maintain a competitive advantage in the semiconductor industry. Or you could say it failed to invest effectively enough. Regardless, Intel has lost market share to Taiwan Semiconductor, AMD, and more recently, NVIDIA. To make up for the gap in capabilities, Intel has undergone a massive capital investment program in recent years, investing tens of billions of dollars in new manufacturing facilities, technology from leading providers, and capitalizing on government incentives for these programs. Unfortunately, progress has not been smooth, and in the latest investor update, Intel announced the dreaded decision to pause the dividend, a generally telltale sign that a company needs major improvement. To that end, Intel could undergo another strategic shift by selling business segments to raise capital, reduce complexity, and lower expenses. Let's take a look at what Intel is considering in recent days. Hey everyone, I wanted to take a moment to thank the sponsor of this video. Moomoo is a trading platform that allows individuals to buy and sell stocks and other investments. I posted the link to Moomoo in the description below. If you use that link to sign up to Moomoo, it'll help support my channel, but more importantly, you can get special incentives for using my link, including up to extra 10 free stocks. Alright, so according to a Reuters article published on September 2nd, Intel CEO Pat Gelsinger and key executives are expected to present the plan later this month to the company's board of directors to slice off unnecessary businesses and revamp capital spending, and this is according to sources familiar with the matter, as they try to revive the business. On this news, the stock was up over 9% just on this news. Now, Intel has several business segments, and they've added and separated a new business segment where they're going to they have already created the Foundry segment, where they will be a third-party manufacturer of semiconductor chips. In other words, non-Intel branded chips they will help manufacture. Someone else will do the design. They will just do manufacturing. So now their business has become more complex, lots of moving parts, and it seems as though it's getting too big to manage. When a business gets this large, sometimes you experience diseconomies in scale, where the larger the business gets, the more difficult it becomes to manage, and you encounter more mistakes. That's what's been happening with Intel. There's been a lot of moving parts lately, and the business has become more difficult to manage. Costs are rising, cash flow is decreasing, and investors are becoming concerned. That's why recent discussion and rumors are coming out that Intel is going to change tact once again, try to cut off a couple of business segments, sell them off. That way, the business becomes smaller and more manageable. And then it also brings in capital, which Intel desperately needs right now. They've spent tens of billions of dollars in this new strategy in expanding manufacturing capacity and adding the Foundry segment, but that's all weighed down the company's cash flow and its balance sheet, and investors are getting concerned that Intel has stretched itself too far. Interestingly, the proposal does not yet include plans to split Intel and sell off its contract manufacturing operation or the Foundry segment to a buyer such as Taiwan Semiconductor Manufacturing, according to the source. And this would be an interesting decision because Taiwan Semiconductor, I feel, would be interested in this because Taiwan Semiconductor Manufacturing itself is trying to diversify its manufacturing business. It's right now very concentrated in Taiwan, and it's trying to diversify away from that because there's great political risk, geopolitical risk for Taiwan Semiconductor by having so much of its business concentrated in Taiwan, a region that's disputed, and China has claimed that it should be part of China and has threatened to reintegrate that region by force if necessary. So by having such a large concentration in that disputed region, it's brought down Taiwan Semiconductor's valuation. Investors are not willing to pay a high premium that Taiwan Semiconductor's business, if you just exclude the geopolitical risk, the business itself deserves a higher premium valuation, but it's trading at a more depressed valuation because of the geopolitical risk. So by Taiwan Semiconductor purchasing some of these manufacturing assets from Intel, it could make quick progress in diversifying that supply chain. Now, it won't be easy because these manufacturing facilities are of the highest technology and of the highest skill necessary. So the integration of this is not an easy thing, but it would be interested. It would be interested, in my opinion, because Taiwan Semiconductor is looking to diversify itself, is spending billions of dollars to add facilities in the US, in Japan, in Germany. And so it would be interested at the right price, at the right terms. If Intel was to approach Taiwan Semiconductor, they would answer the phone. I think they would answer the phone, and Intel could find an opportune partner here with Taiwan Semiconductor if they are interested. Now, regarding the foundry business, Intel has broken it off from the design business, and it's been reporting financial results separately. The company has erected a wall between design and manufacturing to assure that potential customers of the design division would have no access to the tech secrets of customers using their fabs to manufacture their chips. And this has been a noted conflict of interest for Intel's strategy of becoming this manufacturer, this fabrication facility, because I mentioned Taiwan Semiconductor earlier. Taiwan Semiconductor does not produce any of its own chips, meaning they don't have any of their own branded chips. They solely do the manufacturing for companies that are looking to outsource their manufacturing. So companies like NVIDIA, AMD, and Apple are some of its most notable customers, partly because those customers don't feel threatened that Taiwan Semiconductor would steal their designs or try to copy their designs and create their own branded chips and use it for their own branded chips and take market share away. And so they feel more comfortable going with Taiwan Semiconductor. Intel is trying to do the same thing by separating the foundry business from the design business. But as a customer, how comfortable would you feel going with Intel if you knew it had its own branded chips and you knew that if you gave it your designs to manufacture, there is a risk they might use that in their own branded chips. So there are some concerns there. Still, Intel has benefited greatly by expanding the manufacturing because they've received billions of dollars from the US government and other governments that incentivized the building of semiconductor manufacturing facilities because they want to onshore some of that technology. Countries are not happy that so much of the semiconductor supply chain is concentrated outside of their shores. So that partly enhanced Intel's plans and caused it to kind of stretch further than it may have otherwise stretched in its manufacturing expansion, because they knew that they were getting supplemented, they were getting subsidized with US government and other government subsidies. So Intel, if you're an interested investor in Intel stock, understand that this is not going to be a quick turnaround. The business, the strategies, it's gotten messy, it's gotten complex. And while the valuation is attractive and longer term, I feel it offers a good risk versus reward, the near term is going to be very messy. It's going to have much ups and downs. And these types of situations, you saw the stock price react up close to 10% on the back of this news. And that's a sign that the stock market supports that strategy, supports the strategy of Intel selling off some segments, getting less complex, getting smaller, more manageable. And given that response, management will take note and will further discussions on that back of that strategy. So interesting times here for Intel. This comes on the back of rising effectiveness of AI that's bringing a strong industry tailwind. Of course, I will keep you posted on these developments. But don't forget to click that link below and take advantage of those free stocks from Moomoo. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.